it is all over. Inflation is over 2.8%. It's coming up. Johnny Cash, what do you have to say about that?
It's all over. My heart echoed. It's all over.
It's all over. That's what the news is saying these days. They're saying that it is all over, that we are finished. Inflation is over. It's not coming back. And what does that mean? It means that home prices could rebound. Is that what it is? Well, we're going to be looking into that today. It's some big stories, I think, for us to take a look at. Now, when they talk about inflation, it is very interesting to me that people still have a problem with understanding what deflation is, inflation, and disinflation. And so this is just disinflation. It's actually not deflation, which means prices are going up, albeit at a slower pace. So let me give you an idea of what this disinflation is. And this is where they are screaming from the rooftops today that we have declared victory. So just imagine for a second that we had something that was $1,000 in the year 2020, $1,000 right here. A year later, massive inflation is taking place. It is now $1,100 for the exact same item, $1,100 up in 2021. Then we move to 2022, it's $1,200, and you're like, my goodness, things are going up $100 a month. I can't even afford that. That is crazy. But then guess what happens? All of a sudden, it's $1,205. Notice that it went up $100 in the first year, $100 here, but the last year it only goes up $5. So all of a sudden we think that we have beaten inflation, but there is no way on God's green earth that we are going back to $1,000 of 2020. No, once prices go up, as we all know, they stay up. And it doesn't go down. And this is for pretty much all commodities that we face on a day-to-day basis. This is just the way it goes. And so whether we're talking about loaves of bread, if we're talking about cars or whatever it is, it's going to come back to that every single time. But let's take a look at some of the information that came out. We're going to look at Statistics Canada. We're going to be looking at the United States and try to see where we are sitting in this crazy, crazy world. All right. So if we take a look right now, what came out, this is the Statistics Canada Consumer Price Index. Notice that they said it rose 2.8% year over year. Now, I know you guys know that 2% is the target, but they changed it this year. 1 to 3%, they said. So 2.8% year over year means that we won, because 3.4 in May, it's coming down. But notice in the second sentence, please take a look at what it says in the second sentence. While the deceleration was fairly broad-based, it's gasoline prices that led to a lower CPI. Oh, isn't that interesting? It has nothing to do with what Canada did or the United States. It only has to do with what's happening with gas prices. Don't you think that that is interesting? All right. So this right now, the deceleration was based on gas prices, but notice that they're still celebrating. Inflation cools to 2.8. This is in the Financial Post, but food and mortgage costs are up sharply. Remember, mortgage costs are adding 30% to the cost of inflation, which is absolutely cray-cray, right? But what is going on, and how do we get to this point? Because the Kiwis are the ones, the New Zealanders, that started this whole 2% cabal, because before we had taxes, right, on different things. And when we couldn't raise taxes over 50%, all of a sudden they needed more taxes. And how could they do it? Because people kind of revolted when it went over that 5-0 mark. So they figured out, if I print extra money, it's an invisible tax on people. So that 2% was an extra 2% tax they could get from you by printing all this fake funny money. Taxation without representation. That kind of gets people upset, right? But we don't really understand it, so people never make a big deal of it. But this is the cabal that went on. This is all countries of the world got to know about this. This happened all the way back in Rome many years ago. But did you notice that it said that the inflation numbers are better, really good, but based on gasoline prices? So we have to take a look at this gasoline prices. Now, I pulled up Brent crude and West Texas intermediate crude. You can see that it doesn't matter what oil, they're almost intrinsically linked. If we just go back a little bit over a year ago, it was almost 120. And then look at this, over the year, it's just crushing the price all the way down, hit as low in the 60s, $60 for oil. Here is one thing that you guys can remember, is that the economy equals oil, period. There's no and ifs, like nothing. It is only oil. Every food that we eat is transported with oil. Everything that we use is transported by oil, number one. But number two, your glasses, anything made out of plastic, your clothing, your food that you eat is made from fertilizer from oil. I mean, oil is the recipe, the key ingredient to get everything running. Hopefully, one day we're going to be able to get off of that. But for now, if you want to just look at one thing about the economy, oil would be it. Oil and liquidity. But if you see that the price of oil is dropping like a stone, you got to know that this means that the economy is slowing down, and it takes time. So when Canada says that the price of oil was the reason why inflation fell, well, who controls the oil? Let's take a look at this graph. This is the OPEC countries of the world. So OPEC and non-OPEC. OPEC rules the world, you guys, whether we like it or not. The oil is controlled by the Middle East and obviously the other countries that are part of OPEC as well, but they control a massive amount of the oil around the world. So we have to try to look into that. Now, they did mention in the report, if you kept on reading on, that Prince Edward Island is facing the least inflation, but not for long, because as we know, as of July 1, Prince Edward Island now has a new carbon tax that is being put on them. So say goodbye to that crown very, very soon. Actually, it's already in the rearview mirror. July 1st, it's already come and gone. But we have to look, number one, the question is when we look at this number, okay, when we're looking at the number of inflation that has gone down. Remember at the beginning, we showed you that the price went from $1,000 all the way up to $1,200. Yes, that is true, but that is true when we're looking at like the price of your food bill per month. That is going up and it's not coming down again. We import a lot of people into the country. The grocery stores sell more stuff. Obviously, more people have to eat, and those prices will be sticking around on top of all of the wars that we have going on right now, which is crazy town. That goes up. But the prices of homes don't always go up. Notice this chart. If we go back, this is Canada's money supply M3, and we could look at the United States as well. But over time, especially since the 60s and 70s, through these different wars, look at the amount of money printing that has to happen over the year. This is Canada. Notice the 2007, 8, 9 bubble here. You don't even see anything. If we zoom in, you might be able to see a little nick. That's it. Now let's move forward and let's try to look at what happened in 2020. We all know what happened in 2020, barely even visible. Okay, this barely little dent, but you should see the structure of this line looking like a ski slope and be able to put this on some kind of math projector and know that it's going straight up from here. All right, the United States, let's take a look at them. Now this goes back really far, all the way to 1960. Gray bars are the recessions that have happened in the past. All right, so if we take a look at the recessions that have happened in the past, the increasing of the M3 money supply over and over and over and over and over again. In 2020, it launched like right off a trampoline. And then we see this little curve. So when you see in the papers that they are saying, okay, guys, this has never happened before, we can see that it peaked out right around mid-year last year, and it came off this little tiny bit. Nothing compared to what they started printing over here. So if you look at it overall, you could be able to see the track that it is heading on, and it is going straight up, very similar to the way that Canada's is straight up, even though we don't have that tiny little hook at the very end. So this is very, very important for us to know. And you guys know that we sell properties here. I'm a real estate broker in Toronto, and we specialize in selling homes. So if you ever want to reach out to us, you can go to sellhigher.ca. So how do we take this information and extrapolate this out to the real estate prices, which is the majority of you that are looking at either selling your home or just want to know what the price of your home is worth? How do we extrapolate that out? So we're seeing that inflation, according to them, has been beaten. That's what they're saying right now. It has been beaten. So if it has been beaten, how long will it take to see that? Well, I want you to go and type in response lag right into Google. It's going to tell you that what is response lag? Response lag is also known as impact lag. And this is what every single Fed chair, Powell, Tiff Macklem, they're always talking about it, the lag. It's the time it takes for monetary and fiscal policies designed to smooth out the economic cycle and respond to an adverse economic event to affect the economy once they've been implemented. It's the time that it takes for the policy to take effect. That should make sense, right? All right, so let's take a look. if you go and read it, I point this out all the time. Look, it's still even highlighted. How long does it take? It can take 18 months. 18 months. It says right on their website, 18 months. That's how long it takes for you to see any change. But that is since the last time that they changed interest rates. Please notice that. That does not mean the first time that they changed rates, because we're not even at 18 months since the first rate hike that they did last spring. We have to wait 18 months since the last one. So we got some runway to go, you guys. All right, so now that we know that it's 18 months, what is the other parts of it? So let's go again. We apparently, according to the CPI that's released now, we beat it. We're now within that time slot right now. We're in it. But remember, we always had 2%. Remember that we had for inflation? Now the government is saying, if you go to the Bank of Canada, that the measures of inflation, that they want the inflation control target of 1 to 3%. Of course, it always been 2%, right? But now they're going to say 1 to 3 sounds better, gives them a little extra fudge factor. So now that we're sitting at their own words, not mine, now that we're at 2.8%, you guys, wow, they're going to be celebrating in the streets, dancing in the street. You know what I mean? They're excited about this. They hit it. All right. So where is Canada sitting right now? So Canada is sitting at 5% interest rate. This is what is crushing home prices, is the interest rate of 5%. But the United States, you're going to tell me, David, is at 5.2%, 5.25 right now, and they're going up to 5.5 imminently. Really, really soon, they're going to 5.5. 96% chance they're going to 5.5. But Canada is sitting at 5. And we look a little dumb because, you see, we paused it twice in March and April. Please look at this chart. I need you to see it went up and up and up. We were following the United States. And then notice what happened in March and April. We remained flat. So we got a little bit of egg on our face. We're not looking too good right now, right? Because Canada decided to go their own way and not follow our biggest trading partner. United States just kept on going up and up and up. One pause, and now they're going to raise it again. So let's review March, April. We paused. Now let's look at our Canadian dollar, because how did that go for us? Well, if you look through March and April, oh my goodness. So when we paused, our dollar tanks from 75 cents and drops as low as 72 cents. So that's 3%. Of course, as you guys just saw in the chart, we started raising rates again in June and July. Okay, so how did our dollar do in June and July? Oh my goodness, guys. Look at that, straight up. So do you think this is a coincidence that our dollar is in the complete crapper when we decide, for whatever reason, to pause rates? But when we decide to raise the rates here in June and July, all of a sudden, our Canadian dollar goes higher. So what does that mean? It means when our dollar goes in the crapper by 3%, how much does Canada import? And Canada imports $757 billion worth of stuff, $750 billion. You just try to figure out what that means. $750 billion, my friends. That 3% down, what does that equal out to? I don't know, like $50 billion or something like that, like sprinkled over every single ice cap that you have, every donut that you have, every washing machine that you buy has to go up. It has to be sprinkled over everything else. So at the end of the day, you're going to pay, like it or not, is my point. So either we raise up our mortgage rates to match the United States and our mortgage goes up, but our dollar doesn't tank, or we pause our rates in Canada on our mortgage. We save money on our mortgage, but then our dollar goes down the doo-doo here. And now every single thing that you buy in Canada is going to go up in price. So either your mortgage goes up $200 or your groceries go up $200. That's your choice. It's not a very good choice, is it? But either way, you're paying the $200. That's the note here. So we might as well be following the United States, because our dollar is going to tank otherwise. Right now, it's gone right back up to 75 cents. We generally like it around 80 cents. That's what we need. But in Canada, we import an enormous amount of stuff from overseas. The majority of it is in US dollars. And so we have to pay even more that way. Now in Toronto, I want you to zoom in here, take your eyes and look really well at the bottom here. 2007, 2008, 2009. These are the years that America was having a complete meltdown. I mean, complete meltdown. Things were going really, really poorly. But look at what happened in 2007, 2008, 2009. Prices kept on going up. Canada did not even skip a beat, my friends. Not even a beat. Okay, so look at where we are right now when we look at this graph. Can you guys even see this micro little hook here at the end? That's all that's happened with prices. Barely anything. Where are we sitting right now? If you look up in this top right corner up here, right here, look at when I have it right there. It'll tell you what the prices are. Detached property is 1.4 million, a freehold townhome 1.3, condo townhome 900,000, and a condominium at 775. The last time, I need you to pay attention to this. The last time that we had a prime rate of 7% in Canada, it was in the year 2000. 2000. So back in the year 2000, a detached property was only 250,000 and a condo was 150. That's the last time we had 7%. So you guys are going to tell me, I know that salaries have gone up. Of course they've gone up since the year 2000. But guys, these prices have not corrected yet. So how long does it take for prices to correct, David? I'm glad that you asked. Let's go back. Remember what I told you? Response lag. It takes 18 months after the last rate hike. And we haven't seen the last rate hikes. We're probably going to see another one or two. Canada, if we're going to do any good, we're going to catch up those two that were down. See, if the United States move to 5.5 soon, we're going to be 2 rate hikes below. And so that's what I would be preparing for my base case. Now, Toronto prices have not adjusted yet to that new correction. It has not happened. But let's just take a look at some of the cities in Canada. Take a look at this graph. As you can see, if we go back all the way down to 2006 here, they were all in a very, very tight bundle. Did you notice that? In a tight bundle. All the property prices were in a very tight bundle. They weren't like super, super different. What does that all run you? It was running from 83,000 to 350,000 or something like that. But you notice over the last 20 years, the prices have really started to separate. So there's some that have these massive mood swings. If you're taking a look at these crazy ones, what is this top one? Oakville, absolutely bananas. Of course, Mississauga is in there. Greater Vancouver's the third worst. These are very manic depressive. If you go through this type of a drop right there, we're talking bankruptcy, you guys. Bankruptcies all over the place. If you had that, a price dropping from 1.6 all the way down to 1.2, evaporating $400,000, that will wipe you out. But all the cities in this lower half, they're very, very, very stable. So it really depends where you are. Of course, if you're in a manic depressive market, you're going to get hurt a lot more. So I want to caution everybody about that. All right, you guys, thank you so much for coming by on TikTok and Facebook and YouTube. Appreciate it. Thank you so much. Let me know if there's anything I could do to help you. If you want to sell your property in Toronto, reach out to me at sellhire.ca. I hope that you're having a fantastic day. We'll talk to you soon.